Welcome to OmniTalk, powered by Nextsoft. I'm your host, Amy Rice, and OmniTalk is a podcast focusing on Fintech and how it affects banks and credit unions. Today is the first of a two-part series with the founder and CEO of Cadence, Nelson Chu. Nelson has a wealth of knowledge about blockchain, disruptors within the banking industry, and what advancements we can anticipate in the future of Fintech. Today I have Nelson Chu on the phone with me. He's the CEO and founder of Cadence.
Hi, how you doing? Thanks for having me.
I want to start this off by talking a little bit about your background and how you became involved in the fintech industry.
Sure, absolutely. So I have a very short stint in finance. I was at Merrill Lynch for literally the last 2 months of Merrill Lynch's life. And then it became Bank of America. So that was my first job really out of school. So it's a heck of a time to join the financial services industry. Left that to join the buy side after about a year and a half at Bank of America. Decided to join the biggest buy side shop on the street at the time, and it still is right now, which is BlackRock. Lasted there for about a year before I realized I simply just hated my life. And so I figured, you know what, now's the time to try and do something. So I was stumbling around a little bit, thought I could, do anything I wanted to do, and realized just how hard it was to actually start a company. And so at that point, it reached a point where I actually just was broke and had to figure out what I wanted to be when I grew up. So when you're broke, you end up being a consultant. That's kind of the most natural progression as you get hired for services and whatnot. So at that point, built out a single person consulting firm that was effectively helping startups build from the ground up, leveraging all the things that I had learned while I was stumbling around trying to do a startup at that time. And it ended up becoming a 15-person, 20-person consultancy that really actually did quite well. We were integral in helping startups scale at a very early stage. So that's really where I picked up a lot of my how to build a company experience, if you will. Throughout that time, we had the opportunity to invest in a couple startups. We saw how founders grew their companies and what the challenges they faced and how to navigate them. And at the same time, we also provided all of the product marketing, design expertise that they needed to kind of reach that next phase. So all of that was great, but realized that when you're selling a consulting company or selling services, you don't really get to do any of the cool stuff. Your team does all the actual consulting. So I was just simply a glorified sales guy. And I realized that there's a lot more to life than just doing that. And so at that point, decided that for the right idea, the right time, I would actually do it the old-fashioned venture-backed way. And that's really how Cadence came to be. We saw an opportunity in the market. We saw the gap in the market that we were looking to fill. And that was the jumping off point to say, I have all the people I need to do this. I have all the, hopefully, connections I need to do this, which ended up being not necessarily the case. But it ended up working out okay for us so far.
Could you explain kind of what Cadence does?
Sure. So it's actually quite simple, believe it or not. So what we do is build a securitization technology platform for private credit. So private credit is a very attractive asset class within private capital markets today. It's not really covered by anybody else on the public side. And so we provide them with the opportunity to invest in really interesting, innovative products that we either structure ourselves or provide the technology for others to be able to structure. And then they can get good returns in an environment where yields really aren't that high. So the easiest way to look at it is just break it down to a very simple example. You have all these fintech lenders coming out on the market right now that are helping fill the gap that the banks used to do when they used to lend money to small businesses. And so these fintech lenders need capital as well to be able to lend out. So they can leverage a platform like ours to be able to source the capital they need at a very efficient, cheap rate, hopefully. And then as they grow and get to the next levels of their company, we help them kind of achieve their next stage as well and get to that next stage. And so every single phase of a specialty finance or private credit lender's growth, we have a software, a service, or solution to help them get there.
I'm assuming that blockchain technology is involved in what you do at Cadence. Can you talk about how blockchain is changing the future of the financial industry?
Yeah, I think I would say probably slowly, and probably more slowly than people would like, but there is definitely a value prop to blockchain. So for us in particular, we use a very, I would say, high-level version of blockchain or conceptual version of blockchain, in the sense that everything that we do still has real-world paper contracts associated with it. But we leverage, we would argue, the best parts of blockchain to provide an added layer of transparency to it. So for example, when you make an investment on one of our platforms, you actually have a digital wallet that gets associated with you. And you also have a track record, immutable track record of every single investment you ever made and for how much. And that applies to every other investor on our platforms as well. And so you can see how much they put in, what deals they put it in for. And so this kind of perfect cap table of a transaction is something that doesn't really exist in private markets today. So when I mentioned earlier that we're building solutions for private credit and ultimately, hopefully, private capital markets, the entire private capital markets industry has been basically founded upon opacity, right? So it's really actually hard to get a sense for how the underlying investments are performing, how your data is coming through. All of it's different, disjointed, whatever you want to call it, it pretty much fits the bill for private capital markets. So we're believing and hoping that blockchain can change all that, layering on this level of transparency at stage one, and then ultimately, hopefully, facilitating and leveraging that transparency to do additional transactions on the secondary side. Those are all things that blockchain can help afford to do and do it a lot more efficient than other ways that are out there today. So I think it's a gradual step-by-step process. I think blockchain has a very natural use case for financial services, but it will take a while for adoption to happen, whether it's because of willingness to adopt from the parties that are involved, that are incumbents, that are just very slow moving. Or just from a regulatory standpoint, there needs to be a lot that needs to happen for even the technology to mature to the point where the regulators are comfortable with it being used as a, call it, single source of truth.
Where have you seen the most disruption in financial services so far?
Yeah, I would say probably on the payment side. I think that's actually critically important these days, especially as you're seeing economies suffer around the world with the result of what's happening with COVID, and there's people looking for safe haven assets. And so the ability to make payments, the ability to invest into assets that are not necessarily correlated with their existing currencies is incredibly valuable. So when you look at things like Bitcoin, when you look at things like stable coins, the ability, for example, for someone to use their existing currency and basically buy Bitcoin with it, transfer into a stable coin, and then start to transact with people like that is incredibly powerful and not something that anything could have happened years ago, right? It would be unimaginable. And so the ability to facilitate real-time payments is a innovation that I've seen would have a big, tremendous value add just to how countries and people all around the world do business with one another.
What other changes in technology have you seen as a result of the COVID-19 pandemic?
Yeah, so I would say transparency in the underlying assets has been critically important. So there's several fintech startups, us included, that are trying to push for that more and more. So especially in the space that we play in within private credit, and like I mentioned, private capital markets, there's just not really a lot there. And so if you have the ability to make it transparent, it does really help everyone involved. And so the desire to really better understand what you're investing into, how it's doing, how you can actually mark to market the actual underlying assets. All of that is super, super powerful. And when there's times of crisis or times of extreme volatility, that becomes more and more important. And so I think the ability for the banks and investors and issuers and all of these counterparties to really not provide that transparency, that doesn't really work anymore. I think in this day and age, that becomes the new norm, and that's the expectation. And so it's a good thing. It's a good thing all around for everybody. More transparency, more data only makes for more efficient markets, and that's what we're hoping to achieve, and that's what we're hoping to see coming out of all of this.
With all of these open banking online lending platforms coming into the market, how will this affect the more traditional banks?
So that's an interesting question. We have a very, very archaic banking system that is a little bit slow to move. So I think just even from like a bank licensing standpoint, the ability to get a license is incredibly difficult today. And I know that startups are slowly but surely starting to get there. Actually, startups is the wrong word. I think bigger companies that used to be startups are starting to get there. But it's going to take a while, and I think it's not going to be something that they can readily give everybody. And so I think would it be great if it were to happen? Absolutely. But I think this is one area where Europe is a bit more progressive than we are. I think it'll take some time just from a straight regulatory standpoint. And I think even from the big bank standpoint, they're incentivized for these to not work. And they're incentivized for these startups to leverage their own infrastructure and their licenses. They're going to have a hard go in trying to convince and lobby the regulators to get to go in their favor. So it will take time. I think it's inevitable, but it's going to be a while.
This episode of OmniTalk was sponsored by Nextsoft. Nextsoft is your all-in-one stop to help your company secure, connect, and optimize your data. Welcome to Data Done Right. Tune in 2 weeks from now to listen to the rest of our interview with Nelson Chu. He'll dive more into disruptors within the financial industry and how this will affect financial institutions. Thanks for listening. As always, stay safe and stay well.